Amboy, how are you? Hello, Amboy.
Yes.
I'm saying hi. Can you hear me?
Yes.
Hello. Yes, I can hear you.
Okay. I was confirming my mic is performing.
It's performing.
So can you see my screen? Achieng,
Yes.
Yes,
we are good
I
to
can
go.
see.
So today we are looking into the merging role of NGOs, particularly financial intermediation. Most NGOs, we say that they start with a very different objective, but by and by, they realize that there is a need of empowering the micro enterprises or the smallholder micro enterprises they are dealing in. So once you join in, kindly mute yourself. Mute yourself when you join in. So when we talk of financial intermediation, a financial intermediary is basically an institution or an individual who serves as a middleman among now diverse parties, more so facilitating financial transaction. So in the financial intermediation, it's that productive activity in which the institutional unit goes ahead and incurs liability on its own account for purposes of acquiring financial assets. Of course, through engaging other financial institutions for the transactions now to be able to channel these funds now to the borrowers. And this is an area that most microenterprises in development organizations have decided to undertake. Previously, I was giving an example of Faulu, Kenya, and I gave a history of how it was formed somewhere in Madare Valley, trying to cater for the needs of the poor, the hungry individuals. And through the impoverishing them, they were able now from there to empower them. So you'll see most NGOs will come with very different objectives, but by and by, they will now shape or rather review their objectivity and start engaging in financial intermediation, which now brings the need for the transformation in the approach of the way they used to do their business or carry out their mandate as an NGO, right? So NGOs that have made this decision, they believe that such a transformation will be the only way to address the demand of the financial services over the long term and in a very amicable manner. So financial intermediation is the route that most NGOs are taking, and they decide most of them to specialize in the financial services. They scale up their lending activities, and by and by, they reach the customer base that they intended. So this expansion of the lending activities now becomes their vision, and it drives now the agenda of the particular NGO going forward. Of course, through influencing their operations and differentiating their production as an NGO or their products as an NGO. So these organizations become specialized lending institutions with a primary objective of improving the quality and efficiency of their lending operations and expanding them significantly. So once an NGO decides now to follow this approach, its potential area of coverage now becomes the financial sector. And of course, they will target either a whole country or an entire region. If you look at the characteristics of the NGOs engaging in financial intermediation, I've listed there. Now, one of them is the governance and boards. Now, in the financial institutions, we say the backbone of any financial institution that need to survive in the industry is the board. And we've seen most financial institutions going down because of what we call the corporate governance issues. The management come together, they decide to give themselves huge loans. Then by and by, they are unable or they start defaulting on these loans. So what happens? Their lending book becomes bad. They are unable to meet their operational expenses. For example, if an institution goes to a point of being unable to pay the salaries of its employees, then it's a serious issue. So governance and boards then becomes the bedrock or the backbone through which any NGO that needs to engage in the financial intermediation should consider and ensure that it really performs for them. So the governance function and the composition of the board under the expansion-led approach is very crucial. And considerations have to be made because the board decides now when or whether the NGO should move forward as a financial intermediary, if there are key factors that need to come to play, and in particular, the increased level of effort to ensure that they are able to meet the target of the market that they are going for. So the first way in which NGO link into the financial system in their countries is through choosing private sector individuals. They may go for business people who have some business acumen in banking. Others will go for former bankers who are working as board members. Some will go for the private sector board members, and they do this to ensure that they are creating access to sources of finance that are otherwise unreachable. And we've seen most of the NGOs, they will approach those people we call the venture capitalists or the angel investors. An angel investor is someone who has that money and they are willing to collaborate or to meet with another person and achieve a certain objective. So most NGOs will link up with these people, now the venture capitalists or the angel investors, to pursue, or they'll ensure that they are in their board to pursue that objective. They'll also outline a vision with the NGO that can take it forward for financial viability and intermediation. So they'll do this through the provision of what we call the technical financial expertise, which is very necessary in preparation for the expansion and the institutional transformation. Therefore, governance and boards, they are very vital. They are priceless and they are essential resource for any expansion process that the NGO needs to take. I'm saying priceless because at times even whatever they take home as a board allowance cannot consummate the services they are offering to this particular NGO. Now, the second factor or characteristic is the clients reached, or the intended, or what we call the target clients. While scaling up in the operation, it's key to, or scaling up refers to the gradual but consistent expansion of the operations to reach now the intended small-scale entrepreneurs. So they will run from hundreds, thousands, until they reach now the millions, if the NGO is intending to go that route. So scaling up leads programs to develop a market perspective and to focus on financial services that respond to the preferences of their clients. And NGOs must maintain clarity about their ultimate objective. It should be clear. For example, if they came in the provision of services to the poor, they should lean toward that objective. They are providing the services to the poor and they are empowering them financially. Secondly, there are some indicators that will assist the determining whether they are lending to the smallest and the neediest borrowers. So the average size of a loan indicates who is borrowing. We don't expect the NGO to come on board as a financial intermediary and then they start giving loans of 10 million, 15 million, 50 million. So we expect that this book will grow gradually. So you have the small loans to reach the smaller businesses, and by as we empower them and as they repay, we should see that book, the lending book, growing exponentially. The other important indicator is gender. So most NGOs reaching a significant percentage of women, or the people we call now the marginalized. So those NGOs, they will ensure that they reach a significant percentage of the marginalized. And in our society, women will be falling in that category. So they'll be providing services to the poor women. And since these women predominate at the bottom of the pyramid of micro enterprise production, most NGOs will come with an objective of supporting them. Juliet. Yes, Juliet? Yeah, those people who are joining and they are not muting yourselves. Kindly, when you join in, mute yourself. So I've said the two indicators. One of them is small loans, reaching smaller businesses, and the second one is gender. We target women because they dominate at the bottom of the pyramid of the micro enterprise production. Then the NGO's coverage must shift now from the local to regional, and eventually they can go global. With a good feasibility study, we ensure that most NGOs will open the branches. So they'll start at one point where the operations are centralized, but as they grow, we expect that they are going to take the services now to the Mwananchi. And this will be through now, of course, having the branches both locally and regionally, if they are regional. Yeah. And through this, they'll be able now to develop what we call a decentralized system of operation. You don't expect to go in a branch in Garissa and they are telling you, you wait, they call the head office to say whether your loan will be processed or not. We expect that whatever the branch that is down there can perform all the activities as if it is the head office. So decentralization of systems and the operations becomes now very important to reach the intended clients. Now, the third and most important also is the source of capital. I said earlier that MFIs, they are listed under the Central Bank of Kenya, is the regulator. To mean, they have to meet the requirement for them to be licensed as a financial intermediary. And some of these ceilings that have been set by the central bank, they really pull them. So a source of capital becomes very imperative. So the shift from being a donor-funded organization to being one that grants or gives loans means that there is a dramatic change. You are giving or you are donor funded. Let's say you came in and you are being funded by donors or philanthropists. Now you are here, you have started pursuing an objective of becoming a financial intermediary. What does that mean? You go to meet the criteria that has been set by the regulator, who is the Central Bank of Kenya. So the objective of this organization is to eliminate the subsidies gradually from the lending operations. So once you take this route of being a financial intermediary, you should now know that you are towards now what we call the self-sufficiency. You should not be looking at the donor funds to help move your organization. Because when the customers come and they are looking for the loans, it will become very hard for them to get it if you've not received it from the donor. So expansion into new areas now means that you are supposed to be self-sufficient and you are supposed now to organize yourself and have the capitation. A bank or a financial institution is a business, so it cannot run on grants. Are we there? So you should think of your source of capital because there is that amount that you are supposed to raise to cushion the customer's deposit. Before central bank gives you a license to run as an MFI or a microfinance institution, there are requirements. And one of them is raising a minimum capital. For the Tier 3 bank, I know it is 2.52 million US dollars. So it's not little money. So when you are talking of 2.52 million US dollars, that is 2.5 billion Kenyan shillings. It's quite some amount of money. And if you are planning now to expand into new areas, you need now to continue now planning or organizing your capital in a manner that will meet your expansion target. So access to borrowed money and the capacity to use it fundamentally change the relationship now between the NGO and the donor, and also between the NGO and the financial sector institution. So in the countries that you are domiciled, they will not be seeing you, they will no longer be seeing you as an NGO. So the challenge for this NGO is to find effective ways to link up with their commercial financial institutions to be their sources of funds. Well, they can continue working with the donors, but the commercial institutions or the commercial financial institutions will help them now overcome their need or the source of capital. It's a barrier. And in most occasions, this is the barrier or the constraint to the entry in the financial intermediary sector. Then the other characteristic is the methodology and operations management. So the techniques for providing financial services to the poor, it started or it was proliferated in the 1980s. If you recall when you were giving the examples of the Bank of the People of Indonesia and the way it started. The operations, of course, started as an NGO. They were considering the poor people who needed to run small businesses by giving them soft loans. Then by and by, they demonstrated that when these people are given money, they are able to pay. So they increased their loans, and that's how they became one of the biggest banks in Indonesia. So the technique for providing financial services started then in 1980s. And we could see various NGOs demonstrating that one can lower transaction cost and maintain high repayment rate by reaching large number of people. That's what now the bracket of the Bank of the Republic of the People's Republic of Indonesia, that's the model they adopted. So to move towards financial intermediation, NGOs must perfect their lending methodology, and they should concentrate only on financial services. So if they had come up with some other objectives, they are supposed now to think of the way they are going to narrow down into offering financial services. So as NGOs move now toward financial intermediation, the objective should be to improve efficiency. You have started, yes. So you need now to think of improving your efficiency, increasing the size of your lending operations, rather than getting or experimenting new methodologies. So when we talk of operations management, and we'll be coming to that deeply, we should be looking into the way that after getting the financial sufficiency, they'll be able to improve the efficiency and also increase the size of the lending operation. So if you start, let's say, with a capital of 1 billion, as you increase your number of borrowers, you should also be seeing the size of the book growing. The other characteristic is now the self-sufficiency or the financial standing. So NGOs on the expansion-led track are concerned not only with the operational self-sufficiency, and when I talk of the operational, they are not just concerned with covering their cost with the income that they earn. No, it's a business. So they should be taking into consideration of the financial cost of the borrowed money. You have employees who are working with these branches or who are working in this new venture. You need to pay them. These are employees. So they are not giving free services. As a bank or as a financial intermediary, you are looking into growth. How do you expand? For you to get money for expansion, should be running at a profit, or you should be making income over and above your cost. So the concentration should not be just into looking at the cost that you are incurring versus what you are earning. It should be futuristic. So the high unit cost of making very small loans is reflected in the interest rate they charge. You will find that in some successful programs, the rates of the NGO-led institutions is normally higher than the prevailing market rate. And some goes to 10, 12% higher than the basic or the normal lending rates. What does that mean? The ability to operate at near level or to get the self-sufficiency is very important, because this is a determinant factor on the capacity they can borrow from the commercial bank, and also the rate that they are going to charge the micro enterprises. And this one is common sense. The reason why they charge highly is, if I'm getting my loan, let's say from Equity Bank is charging me, let's say, as a financial intermediary, let's say Equity Bank, Central Bank charges Equity Bank 8.5. They are not supposed to go over and above by 4%. That is the requirement of the Central Bank. So they can only lend to a tune of 12.5%. So I'll be able to get, as a financial intermediary, the NGO is able to get the borrowing from Equity Bank at 12.5%. What does that mean? For you to be able to get something from this money, you charge your micro enterprises higher rates. So it comes a point when these micro enterprises, they outgrow you because they can still access the finances from Equity Bank. They don't need to come to you. So they could go to Equity Bank and get these finances from Equity Bank, isn't it? So to ensure that this does not happen, self-sufficiency is very important to your financial standing. And self-sufficiency is to say, we are now able to raise the capital on our own. We can now avoid now Equity Bank and go directly now to the repository, who is the central bank. If we are able to get our borrowing at the relatively cheaper rate than you are getting from the Equity Bank, then it means that we'll be able also to consider our borrowers. So that should be the scenario. For self-sufficiency, they should be looking into a mechanism of being able to raise the standard or the ceiling that has been set by the central bank for them to directly get their borrowing from central bank. That way, they will trickle it down and ensure that their customers or the micro enterprises are also getting it at a cheaper rate. So from the self-sufficiency, we now look at the financial management. So for the expansion-led organization, investment in effective financial management is essential. And this is essential for the continued growth. And any move into financial intermediation means that the information system are at the heart of good financial management. So an NGO must allocate substantial resources so that its system provides timely and accurate information. We don't want to run into a system that is not up to date. I was giving you an example the other day that back then in 1990s, you could deposit a check. An up-country check used to take 10 days to clear. I don't know whether it's this class that I was telling about. So if someone needs to pay you, they should organize, let's say, if you need the money, they should organize front, with the 10 days for you to get the money. Of course, with the new technology in the bank right now, the check truncating system is able, if I deposit the check in the morning and we are in the same bank, within 2-3 hours, you are supposed to get money. If it is different banks, we give you a duration of 48 hours. So you can see the improved system is able now to perform the transaction very easily. Right now, if you go with your Visa card, and you want to do a transaction anywhere globally, you don't need to have an account in that country. You can leave this country, you are going to China. Let's say you want to buy some goods for running a business. You just need to have the money in your account when you are leaving Kenya. And then you carry your plastic card. Once you get to China, you give your Visa Electron card, they'll transact the money when it is in Kenya. So when we are talking of the systems, they should be up to date. And up to date is to mean, if I'm in China and my account has 2 million, I do a transaction of 1 million. If my account, let's say, is in APSA in Kenya, once I do the transaction, should be automated immediately. I shouldn't wait until I come back. So it should be automated immediately. So I expect within a lapse of 1 minute at the point of transaction, the system in Kenya reflects that Mbogwa is in China and he has done a transaction where he has committed 1 million. We commit that million while in Kenya. Are we together? So an accurate system provides timely and accurate information. It means that the way you are conducting your business, you can easily analyze your performance. I was listening to the Equity CEO, and he was saying that they can tell their performance in minutes. Their system are so sophisticated, and you know they are regional. So we are not talking about the Kenyan territory only. We are talking about Equity Uganda, Equity Tanzania. We are talking about Equity Ethiopia. The other day they purchased BNBC of Congo. So we are talking about if the financial manager goes into the system and they are asked, what profit have we made from morning to 10 a.m.? The manager can do a spot check and report to the MD and say from morning to this time, this is the profit that the bank has been able to make, or this is the loss that the bank has been able to incur. So we are talking of a system that is very accurate. So a good financial management is enhanced by an accurate system. So this bank should ensure, or the financial intermediary, in the name of the NGO, should ensure that they allocate substantial resources that ensures their system is up to date and they can offer what we call the point in time accurate information. And this is very necessary because of generating now the projections or what we call the forecasting into the future. They can easily tell. Then we look at the personnel and staff development. Those people who are working in the former NGO, maybe they were coming from what we call the social sciences background. What do I mean? If the NGO, let's say, was dealing with the poor or the marginalized in the society, of course, they must have tapped into the skill set of someone who understands the social background of people and how they can handle them if they are vulnerable. But right now, they have embarked into what we are calling financial institution, because when they become a financial intermediary, it's like they are converting into a financial institution. So staff training becomes very essential to maintain clear objectives and to motivate also the performance. So we need a skill set of people who have a financial or a banking background, who can really understand the dynamics of the banking industry, and they are able to pull through and help to advise also the bank on the right way of approach to ensure that their products are really penetrating in the market. Also, the NGO will have to combine staff from different disciplines. People think that in the bank you must have done finance or you must have done some actuarial or statistics for you to work in a finance institution. No, we need a multidisciplinary facet of individuals. Reason being, every other person who is coming or approaching the bank, they have a different and unique need. If it is societal, we need a sociologist to sit with that person and advise them. Some are going into businesses that need to be advised by professionals. For example, if I'm coming for the credit to go and run a pharmacy, if this particular bank doesn't have someone who understands the dynamics of pharmacists, how will they be able to assess or underwrite the credit for a pharmacist? That's why I'm saying we need a skill set that ensures that we are all-rounded. Most banks, of course, they train their employees. So training must be provided both to the technical and to the other people who are doing the other work in the financial intermediation. So the most useful approach to staff training integrates training into the ongoing operations to ensure that the staff members receive training in a very structured and a systematic way that will not jeopardize the running of the bank. For example, you could have some what we call the on-job skills training. So when you are doing the on-job skills training, It means that it is happening during the normal hours of the business. This calls for dedicated staff to be doing the actual work, whereas the other staff are doing the training. So we need to ensure that the skills, no one is left. So when one team is doing the BAU, the other one is doing the Sharon Wamaida. How are you?
Yes.
Any question? Damaris, Nafula, question? There are people who are highlighting my notes. Who has a question? So we go on. So we were talking now of the training to ensure that the staff are given the necessary skills, of course, moving on what we are calling the on-job training, that is moving in tandem with the industry. Yeah. So the most useful approach is to ensure that we integrate the staffs that we are employing, because every other day we'll be employing. Give me a second. Yes, someone has raised a hand. Mary Njeri. Mary Njeri. Achieng.
Yes,
You're saying you cannot see in my screen.
I can now see.
Which screen are you talking about? What are you seeing on your screen?
I was talking about the notes, but it's clear now.
Are you able to see all the notes that I'm taking you through, or you are seeing the points,
I am seeing them.
the notes?
Yeah,
So once I scroll down, you can see.
yes.
You can see myself scrolling.
Nope.
So what are you seeing? I asked you what you are seeing. You said you are seeing notes. Are you seeing notes or points? What can you see on your screen? Yes?
Sure, it's only one page which has not moved. The introduction.
Yes, that's what I
Yeah.
wanted you to see.
Mm.
You see, when Jerry is saying that they are seeing notes, the notes are in your portal. The purpose of this class is me sharing what is in the portal, isn't it?
Yes.
Yeah, it won't be useful if I come and read you the notes that you already have. Does it make a lot of sense?
No, it doesn't.
It doesn't. And you realize if I run the notes as you read, there is no learning that will take place. I even advise students, you should now stop looking at the screen, just focus on to what I'm explaining, because that is what is more important, isn't it?
Yes.
I had someone who had a question. Who is this? Brian. Is it Brian? Who was raising the hand? Someone was raising a hand. Andrian. Are you the one who was raising the hand? So we can go on. Sorry, I was interrupted. So we can go on. Team, we can go on.
Yes.
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 Fantastic. So I was giving the characteristics for NGOs who wants now to engage in the business of giving money, yeah, or lending. And by calling them financial intermediary, it means that they are borrowing on behalf. So they are taking the liability on behalf of the customer. So they go borrow and they start lending. And it is from here that they start growing and then they become big financial institutions. I gave an example the other day of Faulu and where it came from, right? Yeah, so I've given the characteristics of an NGO that needs to be a good financial intermediary. Now we go to the challenges. Now this comes with, there are challenges. There is no any business that doesn't have challenges. And the business that this NGO is about to engage in is even more serious. More serious because I'm giving you money. You are a small micro enterprise. I'm not very sure because you are still in your baby, you are taking your baby steps. Whatever the business you are running, whatever the enterprise that you are running. So anything can happen. And we know most micro enterprises fail in the first 6 months. So you are starting a new micro enterprise. You've approached me as a financial intermediary. I've given you that credit. Let's say you pay the first month. You pay the second month. The third month, you are hit by Corona. You are unable to pay. We saw what happened in March. Even the governor of central bank had to give a declaration that all the commercial banks are supposed to consider their customers through giving them a loan holiday. So it's not easy. So there are challenges that comes with it. And one of it is the level of default. You could start and then you're in a dilemma. So you have the social development versus the profit dilemma. So you are unable to make any income because of the challenges that are involved in running the financial intermediary. So most NGOs work as development organizations. So they have developed, through this, they have developed a strong foundation, which is built on what we call the equity considerations. So they really understand the dynamics of the borrowers they are dealing with. So they know that these people are not so well up economically. So we cannot give them, or we cannot expose ourselves to huge risks. So through that understanding, or through that strong foundation, they are able to do what we call their priority listing. So their priority will continue to increase as the poor access the financial services. If, for example, you are coming for, let's say, 10 gallons of maize, I've stopped that. I want you to be self-sufficient. So I've told you, instead of kuwa ukikujia chakula ya msaada, nitakupea 500 shillings. Uende uanze kibanda. So instead of coming for food from this end, I want you to engage in a micro enterprise where I'll give you some small capital, seed capital. You go and try to work around that seed capital to ensure that biashara yako inaendelea na unaweza kununua chakula. So in the process, they are entering the world of financial intermediation, setting financial systems. Are we together? So I started by giving you food. I've stopped the food. I want you to be self-sufficient. I've given you capital. So I want you to be productive. Go produce, buy your own food. After you do that, I could consider increasing this capital. Ndio we expand your business, ndio upate pesa mingi. As I do this, I now charge you as the NGO, ndio na mimi nipate income. For sustainability, I need an extra money. I'm not very sure that everyone I've given the 500 will pay. So I need to cushion myself. So by assuming this role, the NGOs are incorporating the basic thinking of financial institution. So they start by making or giving loans while reducing the risks through charging an interest. And this interest will reflect now as a cost of lending. And this is entrenched in the social objectives of reaching out to the poor. So wataanza na kuwapea msaada, waanze kuwapea grant. Grant ni kusema hiyo 500 nimekupea, utarudisha ikiwa 500. Then from there, I increase the 500, but I start charging you interest. Through this interest, now the social development will be now married with the profit objective. I'm not only developing you socially, but also as a NGO, I'm becoming a financial intermediary that is supposed to make some profit to meet its operations. So the conflict that arises is quickly apparent because most of these organizations seek to maintain the social development objectives. And it's very hard for you to retain the social development and become a profit venture. It's very hard. It's a very strict balance. And that's why I'm talking about the challenge of social development versus the profit dilemma. So one challenge for this organization is to maintain the integrity of this duality of purpose. I want to develop you socially, yet I want to make money out of you. So it's very serious. It's a very serious challenge that you are ensuring that you are not allowing one part to overtake the other. I develop you socially, but I'm getting something from it. So the ownership profile of who invests in these institutions and the values they bring as shareholders will either safeguard or compromise the social commitment of the institution. So it's a very strict balance that should be stricken here to ensure that we marry the two and vouch the way forward. Then we have the savings mobilization, is the second challenge. So capturing savings is essential part of any financial intermediation because it is the only way that I know you have the ability to pay. If you cannot save, even when you borrow, you cannot pay. So you should have shown the culture of you can set aside some of the money that you are getting and putting it or trusting it with the NGO. Then from there, we'll start negotiating. And if you look even in the conventional way of borrowing right now, it's either you have your payslip with the bank or your salary goes through that bank, or your business account is in that bank. That is the only way a commercial bank will give you credit. Even Shylocks, now leave alone the conventional banking system, even a Shylock wants to know that you have the ability to pay. So let us leave alone even the NGOs that need to become now the financial intermediaries. Even the conventional commercial banks, they need to know that you have a stable, disposable income. So if they give you a loan, they are assured, this is a risk. They are assured that this person will be able to pay back. Are we there? So they have always conceived their program as lending operation, and they have concentrated on perfecting their methodology in this area. Even when they were giving you some parts or portions of food, they knew where they were coming from. They wanted now to start attracting you to be coming and getting this portion of food in exchange of the skills on how you can assist or develop yourself socially. From there, they now start now coming up with the training. Anaanza kuambia, jameni, hii pesa tunawapea very soon itaisha. Kwa hivyo mtu aanzishe kitu atakuwa akifanya hata kama ni kibanda, and we are willing to support you with seed capital. Ndio mkikuwa now self-sufficient, it becomes now a business venture. So by and by, as they withdraw the subsidies or the incentives, they are bringing in now the aspect of savings mobilization. And that is how by and by they become a financial intermediary. So as mentioned, regulatory policies in most countries prevent the NGOs from capturing savings. It's a dilemma. There is no any country that will allow you came in as an NGO, alafu uanze kuitisha its citizens pesa. Huenda you want to swindle them. So you want buy and buy, and if you recall how the colonial government came into this country, they came in as evangelists. So they started evangelizing. As the Africans were going for the word of God, they started giving them goodies. Then from there, education. Then from education, you can now see where we are. Most of the institutions, even the financial institutions, we had the Bank of UK, it was the biggest bank them days in the post-colonial era. So they knew you must have an entry level for you to start now as an NGO, and then being in that state of non-profit, you start now capturing savings. So finally, some organizations believe that accepting the savings should be the second step, because an organization must first establish itself and create that trust. Before I start giving you my money or saving with you, you should have come from somewhere, so I can trust you. Even those people who are forming chamas, you must have a common background. Either you are schooling together, you are working together, you are in the same neighborhood, you are in the same church, etc. You should be having a common denominator before you start entrusting each other with anyone's money. Because once you give that money, in itself, you are ensuring that that money is safe and you are a competent lender. Juu hiyo pesa unatoa kidogo inapewa mama fulani, expecting that they are going to pay back. So there should be a mechanism of making sure that the money or the funds are safe before you accept in giving it out. Are we there? So the experience of some successful programs show that savings can be introduced. So after now you run subsequent successful programs, you now introduce a compulsory feature where people can save and start lending. So unaona kwanza umebuild trust, then you mobilize savings. Then from there, you now bring in a compulsory feature ya kusema, kwa hii pesa tuna save, mtu atakuwa akipewa let's say 30% of your savings. So savings mobilization must become an integral part of the NGO, which needs to move forward as a financial intermediary. So you choose institutions that for legal reasons cannot capture savings and can nevertheless facilitate their clients access to formal saving services. It will jeopardize your operations. So those NGOs that choose to become financial institutions, they should recognize that savings is a requirement. For you to be a financial intermediary, you must start with building that trust with the borrowers. They start savings, then you introduce the other feature of lending them that money. Then from there, the other challenge is the institution sustainability, or what we call taking off. Now, starting is not a problem. Sustaining is the issue. So unaweza anzisha huu mradi, even before 1 month ends, umemaliza capital. So the moment you open the compulsory feature ya kulend, everyone comes for that money. Afu pesa iishe. If they start now defaulting immediately, you lose. You'll never take off as a bank. So you should make sure that the long-term viability of the organization is paramount. That's why in the previous topic, you were talking of the vision and mission. You should draw a strategic plan of where you want to go as a financial intermediary. And that's why most of these intermediaries, they'll come up with a clause ya kusema you can only take 30% of your savings. What does that mean? 70% is retained fair. They should also make sure that this cap that they are setting is well regulated such that it won't jeopardize the savings that were being brought on board. You the moment nimekupea loan, ujue sasa umecommit part of the disposable income that you used to save. So how will you be able to pay this loan? Are we there? That's why the NGO will cushion itself at the start. It said, we are giving you this. We cannot give you more than 30% to ensure that it's sustainable. So although all micro enterprises aspire to be sustainable, not all of them become sustainable. And that's why most NGOs die. Remember, they are run by human beings. They are not run by machines. A human being, mtu anaweza kuwa alileta ile NGO hapa ndio ajitajirishe. So all along he's been looking for the opportunity to become rich. So the moment they realize that they are going nowhere, they won't commit their energy anymore. So they'll just let it go and say, God knows I tried. God knows I tried to assist these people. Lakini nimeshindwa kuwasaidia. So most NGOs will not be sustainable. They will momentarily die. If you go to the registrar of associations and the NGOs, you'll believe me that most NGOs, most of them, they collapse at the onset. And reason being, if they didn't aspire or set their objective at one point to be self-sufficient and become sustainable, then institutional sustainability becomes a tall order for them. So sustainability must be discussed in the context of decreasing the funding. If they were getting this money from the donor fund, they should by and by consider not getting the fund from the donor and instead increase borrowing money or increase their deposits. So wewe ulikuwa umezoea kupewa, lazima umake sure ile mfereji ya kupewa unaendelea kuifunga na wewe unapeana. That's the only way that you will become sustainable. Pesa ya kupewa, you will never be sustainable. And that's why you see politicians, these small goodies, the freebies they are giving to the mwananchi, it will never assist them because they never come up with a mechanism to make these people to be stable. If it is not sustainable, even if you give me 1,000 daily, every month you will be giving me 30,000. But if you don't set a mechanism where I can be reliable, I'll still be coming 10 years from now, I'll still be coming for that 1,000. We have employees who are even earning over 100, others are earning 300,000. But because they are living life that is not theirs, they are living large. Kama unaani mshahara ya 100,000 na unaishi nyumba ya rent ya 120,000, where will you get into 20,000 to pay for the rent? Haujakula chakula. So you must make sure that the grant that you are receiving is decreased and exponentially you are increasing your deposits. From there, you now start borrowing. Tumesema hii pesa banks zinapeana, zinaitoa central bank. Ndio central bank ikubali kukupea hiyo pesa. You must show that you are able to mobilize savings. So if an NGO borrows money to lend, its continued operation will depend on its capacity to pay back the loan. So very close supervision of the lending operation becomes imperative ingredients for sustainability. So the role of the board comes in handy kwa sababu these are supervisory function. So the management or the board should ensure that they strike a balance between the deposits and the borrowing. If one supersedes the other, this institution will crumble down. So you should make sure that you are mobilizing your savings as you borrow to lend. So those are the three main challenges that may hit an NGO that aspires to be a financial intermediary. And I beg to end my lecture there. Any question? Any questions? I've realized we are 43 in this class, but only 30 people have responded to my assignment. Ama relax, the deadline is today. Niwache hiyo mbio niko nayo, you still have some time to midnight. So ensure that you give in your assignment. I'm not extending that period. Any question? Any question? Ali Safari. Haris. Safari.
Yes, sir. Yes, sir.
How is the speed? Tuongezee kidogo.
No, it's fine.
Anyone who has a concern? So there is a discussion forum that I've shared in the page, but I want us to go to the portal and engage. You realize that after every topic, I give you some revision questions. Your exam will come nowhere out of those questions. So unless you are planning yourself to fail, maswali muko nayo, notes muko nazo, why will you people fail? I don't expect any student to fail in my unit. Sawa Kipnach. Who is using Hope 7 Mate? You see, if I don't see your name here, I'll assume you are not in the class. I cannot really tell who is Hope 7 Mate. I cannot. Nani anatumia Hope 7? What's your name?
Nicole Otwani.
Si unaandika jina yako Otwani.
Sijui mbona haijajiandika leo, nitaandika.
Okay, then we have another character calling the yourself user. Well, I want us to go in the portal and interact from the portal. Enjoy your rest part of the day.